Hello, my dear friends. Today we will discuss a very important announcement by the RBI, which will be effective in next year. All right. And this is why I'm telling you important because this is important for NBFCs. And after this announcement, after this framework on non-fund based credit facilities, NBFCs will get the access to manage their risk. Means it is basically linked with your management syllabus of RBI as well as finance part of RBI Grade B examination. In that way, you can understand this topic. It is linked with both the part of the syllabus of RBI Grade B. All right. So risk management as well as the uh, finance part of RBI. So coming to the point, before discussing this important announcement regarding the non-fund credit facility rules, which is applicable for NBFCs, we will try to understand some of the try to solve some of the MCQs. And if you are confident in these MCQs, then I would like you to write in the comment sections the exact answer, the solution of these MCQs, these three MCQs. So the first MCQs, it is talking about as per the RBI non-fund based credit facilities direction 2025, which of the following entities are not being covered. You need to find out that which of the following entities is not being covered under this framework, under this direction, under the applicability of these directions. Okay. So the first option is commercial bank, that including the RRBs, regional rural banks, and local area banks. Second one, cooperative banks, all the three urban, state as well as central. Then all India financial institutions, all the 5 AIFIs. Fourth, NBFCs and housing finance companies in the base layer. And the fifth, NBFC in the middle layer, providing the partial credit enhancement. So you need to answer, it's very easy question that you need to answer in the comment section, that which is not being covered under this direction, right? Now, coming to the next question, as per RBI non-fund based credit facility direction 2025, with the following statement regarding the partial credit enhancement is or are correct. You need to answer me that which is the following statement regarding the partial credit enhancement is or are correct. So first option, first statement, NBFC in middle layer and above layer are now permitted to extend the partial credit enhancements. Partial credit enhancement can be provided only for corporate bonds and municipal bonds. Third, larger NBFCs with asset size more than 1,000 crore or above are eligible to receive the partial credit enhancements. And for the overall PCE limit has been raised to 50% of the bond value. You need to, from this multiple statement MCQ, you need to answer me that eliminating the wrong one, you need to answer that which option is correct for this second number question. Now, coming to the next question, the third number. See, under the RBI non-fund based credit facility direction, the per exposure limit for PCE has been capped at 1% of the lender's capital fund. What you need to answer, this is one of the statement, and this is one of the fact as well, that the PCE has been capped at 1% of the lender's capital fund. You need to answer what is the aggregate exposure limit for PCE that the NBFC can take, expressed as a percentage of tier 1 capital. As percentage of tier 1 capital, what be the aggregate exposure limit for NBFCs? All right. As a percentage of tier 1 capital, mind this word as well. Now you need to answer the mark the correct options. All right. Now, let's try to understand why I'm telling you this direction is very much important. See here, it actually changes, it has significance to significance for NBFCs in order to manage their credit risks, drafting their policies, and participate in infrastructure financing. Okay, larger NBFCs basically participate in infrastructure financing, which are long-term projects, All right, projects. Now, so this direction is very much important. Okay, because through this direction, NBFCs now calculate their risk and they manage their risk. Why I'm telling you? because if you will understand this partial credit enhancement facilities now, then you will easily understand then why I'm telling this, how this direction is going to provide the management abilities to the NBFCs to manage their credit risk. See, let's see the definition of partial credit before coming to the important directions of this RBI guidelines. First one, the partial credit enhancement. It refers to the technique used to mitigate the risk associated with the repayment of debt. जो आपने कर्ज लिया है उस पे कुछ risk हो, suppose that debt becomes NPA. Okay, so it helps you to calculate the risk associated with that debt. तो किसको help कर रहा है? It is basically helping the NBFCs. It involves a third party providing a limited guarantee or support for the portion of the debt. Suppose NBFC is providing you the debt, ठीक है, providing you the debt, and here is a third party, TP, okay, and he is guaranteeing certain portion of that debt, certain percentage of that debt, okay, certain percentage of that debt as a guarantee that in case of default of by this person, I would pay this portion of amount to NBFC, right? So it involves third party providing a limited guarantee or support for a portion of debt, which helps to improve the credit rating of the debt instruments. All right. This enhancement does not eliminate risk entirely because the third party is guaranteeing only a certain portion of that debt. All right. So it is not going to eliminate the risk entirely, but reduces the it to manageable limit. Now NBFC can manage the remaining part of the risk. Okay. So therefore, partial credit enhancement facility helps to reduce the credit risk associated with the credits given by them. Suppose, let's try to understand with an example. For instance, if a student applies for an education, a student is there, he is applying for education loan without a credit history. Then his parent or guardian came. He is the third party. They came and they act as a guarantor to that student, that if he won't able to pay this much amount of education loan, then I am guaranteeing that certain 50%, 60%, for that I am guaranteeing that I will repay the loan amount to you. All right. This arrangement serves as a form of partial credit enhancement. Means partially the credit is being protected. Partially, not fully, partially. Okay. In summary, we can say that PCE is a valuable financial mechanism that helps to improve the credit profile of the debt instruments. Debt instrument यहाँ पे क्या है? Education loan is the debt instrument, making it easier for issuers to raise funds while providing a safety net for the investors. That is NBFC here. Okay, ठीक है? NBFCs के लिए we are talking about. And this, apart from the NBFCs of middle layer and above layer, other regulated entities are also being covered. Okay, let's try to see which are the regulated entities. You need to remember this, that this direction is applicable to commercial banks, including regional rural banks and local area banks. These two facts you need to remember, all right, so that you won't get confused in the real examination. Second, cooperative banks, urban cooperative banks, state cooperative, as well as central cooperative banks, all India financial institutions, all the 5 AIFIs. Okay. And the fourth one, NBFCs and housing finance bank in middle layer and above. In middle layer and above. All right. In middle layer and above. Okay. In middle layer and above. And this is the answer of question number 1. You can say that option D would be incorrect because it is talking about NBFCs and housing finance bank in base layer. No, in middle layer and above. And above. Okay, so option D is is incorrect. Okay. Now, coming to the next portion, the key provisions of this direction. The first one, mandatory policy inclusion and appraisal standards. NBFC must update their credit policies to cover the non-fund based facilities, ensuring strong appraisal, fraud prevention, monitoring and control at par with the funded exposures. Okay, तो नॉन फंडेड जो एक्सपोजर्स है उसके लिए भी NBFCs need to update their credit profiles, non-fund based facilities, bringing it at par with the funded facilities. Second, issuance only to existing clients. Okay, so non-fund facilities can only be offered to the clients who already maintain funded credits or deposits with the institutions that is supporting it. Okay, that regulated entities. Okay, उनको ही ये facilities मिलेगा. Those who have already made their account, they are already maintaining the funded credit or deposits with that particular regulated entities. Third one, guaranteed must be ironclad, means irrevocable. No unilateral cancellations. Unconditional guarantee will be provided to you without any conditions. And incontrovertible guarantee means immediate payment once invoked. Once NBFCs must restrict the unsecured guarantees via internal caps. So these are some of the key provisions. Next, fourth key provision, very important provision regarding the partial credit enhancement facility. And we have understood this partial credit enhancement facility above only. Now it is easier for you to link it, right? NBFCs in middle layer and above can now extend the partial credit enhancement facilities for corporate special purpose vehicle bonds, larger NBFCs having asset size more than 1,000 crore, municipal bonds is a new addition, and PCE, partial credit enhancement cap, has been raised to 50% of the bond value. Okay, earlier it is being proposed for 20%, now it has been raised to 50% of the bond value. Means up to 50% the third party can become the guarantor. All right, clear with this statement? ठीक है. So coming to the second question. See here, second question. NBFCs in the middle layer and above are now permitted to extend the partial credit enhancement facility. Yes, true. Partial credit enhancement can be provided only for corporate bonds and municipal. No, not true. But for special purpose vehicle bonds as well, larger NBFCs having the asset size of more than 1,000 crores, they are also being covered apart from the municipal and corporate bond. So eliminating option 2. Third one, larger NBFCs with an asset size more than 1,000 crore are eligible to receive the PCE. Yes. For the overall PCE limit has been raised to 50% of the bond value. Perfectly true. So eliminating the second option, the correct answer here it is 1, 3 and 4, option A. All right. Now coming to the next part of the direction, capital and exposure safeguard. So capital adequacy is calculated before enhancement of bond ratings. ठीक है, बॉन्ड का रेटिंग से जो नॉन फंडेड बॉन्ड रेटिंग है उसका इनहैंसमेंट से पहले यू नीड टू calculate the capital adequacy. Per exposure, 1% of the capital fund and aggregate exposure will be 20% of the tier 1 capital. This is the third question of your today's series. Third question, see here. Under this direction, the per exposure limit for PCE is capped at 1% of the lender's capital fund. ठीक है, per exposure. Talking about each exposure capped at, जो upper limit क्या है इसके लिए 1%, और aggregate exposure limit will be kept at 20% as the percentage of tier 1 capital. तो tier 1 capital का 20% तक aggregate exposure limit जो है for PCE will be kept for NBFCs. इसके लिए capping upper ceiling जो है 20%. ठीक है, for PCE, partial credit enhancement, for the capital in tier 1 criteria, right? Next, that this direction will be effective from 1st of April 2026. Important, you need to adopt it with early adoption option as well, right? Digital guarantees will be encouraged in this What would be the benefit? The strategic benefits for NBFCs and infrastructure financing. How this direction is going to give the benefit that we are talking in the earlier as well. First, enhanced bond market access. NBFCs and municipal bonds can now mobilize funds more effectively. All right, more effectively from the market, lowering the borrowing cost. PCE can upgrade the ratings of the bond, upgrade the bond ratings, reducing the interest expenses. The interest burden will be reduced. So lowering the borrowing cost means more and more expenditure will raise, and ultimately it is going to boost the economic growth of our country. All right. Third one, relative buffer for bank limits. Credit enhancement bonds allow the banks to conserve direct lending headrooms. Okay, so these are some of the strategic benefits that the direction is going to give to NBFCs. All right, I hope you understood this topic, everything associated, and this concept as well, the partial credit enhancement concept. Okay, that's all for today, my dear students. See you in the next session. Okay, bye bye. Take care.